Welcome everyone, and thank you for joining today's Bloom Impact Investing webinar on the topic of impact investing for inclusion and affordable housing. My name is Camille. I am the founder of Bloom Impact Investing, and I will be your host today. It's a pleasure to see you all. Happy New Year. Before we start, I would like to acknowledge the First Nations people as the traditional owners of the land on which this meeting is taking place today, which for me is Meerjin, Brisbane. I recognize the country north and south of the Brisbane River as the home of both the Turrbal and Jagera nations. I pay deep respects to the elders, past, present, and future. So again, welcome and Happy New Year, everyone. It is a pleasure to see you all for our first event of the year. And for our new members today, please allow me to introduce Bloom and our Impact Investing Meetup group. So what is this group all about? Why do we meet every fortnight? At Bloom, we are focusing on the impact money can have in the fight against climate change and how much social impact it can have. We are on a mission to make impact investing and sustainable finance easy and accessible. And part of this mission is to offer educational opportunities like these webinars to propel the voices of impact investing and sustainable finance experts like Laurie and Rebecca today, far and wide. Since early last year, we have hosted, I think, around 15 events, all touching on one or several sustainable development goals. Our previous webinars are almost all available on YouTube, on our channel. So simply search Bloom Impact Investing in YouTube and you should find our previous event recordings. The aim of our webinars is also to build a thriving community of impact investors and agents of change so that together we can build a greener, more circular and inclusive economy. And at Bloom, we also think that sustainable investing should be accessible to everyone. And we see a future where a carbon-free and inclusive economy allows people and the planet to thrive. Now, quick housekeeping. Please note this event is being recorded and the webinar will be made available to the attendees after the event. I will email you the recording. Please also note, I have to also go through disclaimers that the information provided in this webinar will be general in nature only and does not constitute personal financial advice. Before acting on any information from this presentation, you should consider how appropriate the information is in regard to your objectives, financial situations, and needs. Finally, please note this is a safe space, so you can ask any questions throughout the event by typing in the chat or also raising your hand. I will ask our speakers some questions at the end of the session and we'll keep 15 minutes at the end for your Q&As. Now, allow me to introduce this webinar's topic and our speakers. Today, we'll dive into the topic of accessible and affordable housing for people with disabilities in Australia. So you might think that this is a fringe issue, but consider this. According to the Australian Institute of Health and Welfare in 2020, more than 4.4 million Australians have a disability. That is 18% of our population. And amongst them, 1 in 8 people need to modify their accommodation due to their disability. An Anglicare report that I found while I was preparing this session on affordable housing found that only 0.5% of rental properties advertised in Australia on a selected weekend in 2019 were affordable and appropriate to single people aged 21 and over receiving the disability support pension. That's compared to 2.2% for a single person on minimum wage. So you see, there's a lot of work to do. So what are the levers to stimulate new social and affordable housing? NDIS participants, SDA housing, what does it all mean? Who can invest in affordable housing? And what tax incentives and government support is there for such investments? Which population in Australia are most at risk of homelessness? What can we do about it? And finally, SVA, so Social Venture Australia, has successfully created investment opportunities in this space for decades, with, amongst other things, the Synergis Fund, I don't know if I'm pronouncing this properly. But how does that work and what is the portfolio made of? Today, I have the honor of hosting two fantastic experts on the topic. They are active investors and beacon leading the way in this field. They are actively investing to offer Australians more affordable housing options. So please welcome Rebecca Thomas and Laurie Berrange today. A quick word about SVA. Social Ventures Australia is a not-for-profit organisation that works with partners to alleviate disadvantage towards an Australia where all people and communities thrive. It's such a wonderful mission. SVA influences systems to deliver better social outcomes for people by learning about what works in communities, helping organizations be more effective, sharing their perspectives and advocating for change. So that's SVA. Now, let me quickly introduce you to the speakers today. Let's start with Rebecca. Rebecca, welcome. Thank you so much for being with us today. Rebecca is the Executive Director of Impact Investing at SVA. She leads the investment of the Social Impact Investment Trust. So that's SVA's impact investing mandate with HESTA, the fund, across a range of sectors and capital instruments. Her focus is primarily on housing investments, namely social, affordable and disability housing projects. Rebecca is also part of the Synergis Fund, a new disability housing fund established by SVA and the Federation Asset Management, working together to deploy capital into the Specialist Disability Accommodation market. Rebecca also acts as a pro bono advisor and volunteer with True Good, a social enterprise working with the homeless and domestic violence survivors. And she is also a board director for YWCA National Housing. How do you get that all done, Rebecca? Prior to joining SVA in 2016, Rebecca held senior roles at GE Capital and Lloyds Banking Group in both Australia and in the UK. She has deep experience in the origination, structuring and execution of debt finance transactions across a range of sectors. Finally, Rebecca holds a honours degree from the University College London. Thank you for being with us, Rebecca. Now, let me introduce our second speaker, Laurie. Laurie is the Associate Director in the Impact Investing team at SVA. Laurie joined Social Ventures Australia's Impact Investing team in 2018. Her primary focus is on the investment of SVA's 70 million social impact investment trust managed on behalf of HESTA and the investment of a new disability housing fund, the Synergis Fund. Laurie was born and raised in South Africa, which is where she began her career in the impact investing field, working for Greater Capital, a not-for-profit consultancy with a key focus on impact investing. Then she left consulting to join a pioneering asset management team that thought to bring investments in social enterprises into the mainstream through the launch of an alternative investment fund. Now, without further ado, thank you so much, Laurie and Rebecca, for being with us today, and over to you to present.
Thanks, Camille, and good afternoon, everyone. Thanks for your time. I know most people will be back at work this week for the first time, so appreciate you taking your time out of your probably second day back in the office to join us today for this call. I'd also like to start by acknowledging country, as Camille did, and acknowledge a country that I'm on today, which is in Sydney, and I'm meeting on Wangal land, so pay my respects to elders past, present and emerging. So let's kick off the session. Hopefully you can all see my screen sharing. We're going to talk through the market more broadly, and then Laurie will dig into SDA and disability housing and give you some background on the Synergis Fund that Camille mentioned in her lovely introduction. So investing for inclusion and housing affordability. And also probably just to say, if you have any questions, either raise your hand in the chat and Camille will grab those and we'll discuss them towards the end of the presentation. So thank you. The first slide is already covered by Camille in terms of who SVA are, but Laurie and I are based in Sydney. Our investment mandate covers the whole of Australia, but we work to find opportunities, especially in the housing side, that deliver both a measurable social and financial return. And one of the fallacies that we find when we're speaking about impact investing is that people often think that that means that we're giving up financial returns for the benefit of social returns. What I will like to say at the start of this is that there are ways to find appropriate risk-adjusted financial returns that drive strong returns, but also positive social outcomes to individuals. And that's where the market is that we work in. So in terms of our experience to date, we've been able to invest a range of capital, both from the fund that Camille mentioned that we manage on behalf of HESTA, and a smaller fund that we manage called the Diversified Impact Fund, which is a $15 million fund. The slide that you can see on your screen details the investments that we've done across a range of housing areas. So one in terms of disability housing, and then a range of housing in terms of social and affordable through community housing providers, but also through innovative housing providers to really open up the affordable housing market to those people that can't access it, which is a big problem in Australia at the moment. Most of you may know that that it's a widely accepted market way to look at housing is across a housing continuum. So it's not just looking at social, affordable, and private rental and various components, but the fact that SVA and most people will look at housing as a continuum, and the fact that different stages of people's lives mean that they can move up that continuum, but also to provide a really robust housing market, you need to have adequate supply across that continuum. All of us know that life brings a range of challenges and shocks to us all. 2020, many of us have gone through things that we would not have gone through in previous other years. So being able to provide housing along the continuum can really make a difference to what a wider housing market can do for all individuals. And it means that individuals can access that depending on various stages of their lives. So SVA have a range of focus areas that we work across, one of which is housing. And as you can see on that slide, we have a vision that the stable, appropriate and affordable accommodation is available for all Australians. We feel that housing especially is a cornerstone requirement for all individuals. The other focus areas that we look at are education, employment, and we also have a focus area on First Australians. And as you can appreciate, if individuals have a stable, safe and appropriate home, access to employment and access to education, that can go a long way to working towards our overall organisation mission of an Australia where all people and communities thrive. So Camille touched on this in her introduction, but as many of you know on this call, Australia has an inadequate supply of stable, appropriate and affordable accommodation. The stats on there are quite scary. And one of the things that Laurie and I and our team are working towards is trying to increase the supply of housing to ensure that those numbers remain not kind of growth to the level that they are, but are able to stabilize them, or at least to improve where the trajectory is going. The demands on government support are substantial, and the social housing waiting lists continue to grow year on year. Home ownership is declining, and that then provides an issue in terms of the overall market for what that means for private renters, and how that then impacts their lives in terms of life shocks, and in terms of what private rental markets are doing, and how that can then make individuals susceptible to housing stress. And then also the fact is that housing affordability is becoming a harder area for individuals to tackle, especially in the year that we've had, and the issues that we're facing in 2021 with job seeker and job keeper running down, and what that means for unemployment levels in Australia. That lack of clarity in terms of whether people can reach home ownership or whether they can be in safe, stable, affordable housing is becoming an issue that we're really having to stare into this year as well as last year. So SBA has an overall perspective of where we think that housing growth and supply and where the market can go. So as I touched on earlier, we're looking at making sure that the market provides stable, appropriate accommodation with wraparound support for those that need it, but also in a financially sustainable system. And that's where the investing part comes in. I think there can be a system where you can find investable product at the top end for private ownership or private landlords, but what does that mean for affordable housing, and what does that mean for individuals and cohorts that can't access those housing solutions? So what we want to make sure is that we're working towards an adequate and appropriate supply of housing stock along the continuum, and that is around the mixed housing levels. So not just social and affordable, but what does the pointy end of housing look like? So in terms of the homelessness side, and how do we drive new supply and appropriate housing at that end, but also how do we drive supply in disability housing, and not just in terms of rental, but home ownership for those that are living with disability as well. And then in terms of that, pathways in terms of support services, but also to provide opportunities for people to move along the continuum. So that's slides an overview of SVA's perspective. So I just wanted to touch on kind of what the levers are to stimulate new, affordable and social housing. And this slide talks to the various things that can be done. There's often a need for, excuse me, new investment to drive supply. And the thing that makes it hard for social and affordable housing is, as you can appreciate, the revenues or the rental streams are below market because they're social and affordable housing. And so effectively, you're not going to get the returns of a market private rental investment. So how do we find ways to pull levers to reduce the costs of those projects to then make them more financially sustainable and investable? So some of the levers are on that slide in terms of the reduction of construction or development costs. And there's some great examples of innovative housing solutions, organisations such as Nightingale Housing that SVA have supported through our investment, that work towards looking at innovative design through sustainability and environmentally sound projects and strong carbon neutral housing, but also then that reduces the design costs and the potential development costs as well, because of things like designing for appropriate I guess using space and design adequately, so you're not necessarily requiring air conditioning, but you're looking at design to make those housing developments sustainable and green and environmentally sound. The other ways are looking at financing costs, and we've seen the growth of new bond issuance through NIFIC, which is a government organisation, the National Housing Financial Investment Corp. My brain is still slightly on holiday mode at the moment, so apologies if I'm stumbling over my words. But the NIFIC has been raising bonds in the market, and the proceeds of those bonds have been then delivered to community housing providers to refinance loans and to use those proceeds to develop more stock, but at lower financing costs. So that then improves the financing cost of projects and makes them more viable from a returns perspective for the financiers, as well as the projects and the individuals that then benefit from those houses. The other few things to talk about are tax incentives, and we're seeing things like state by state level tax incentives changing. So land tax for build to rent projects, for example, New South Wales last year changed their policy, and that has hopefully is driving new build to rent projects that we may see come through being announced this year. And then also, how do we reduce the land costs? Because often in these projects, and especially in metropolitan areas and in certain states, those land costs become prohibitive for social and affordable housing. So how do we work with the right partners to do that? So one of the ways is working with government, and often when we talk about social housing, especially, we talk about government subsidies as a way to really reduce the cost of the project and to work with private investors to drive investment into the sector. This is not an extensive and exhaustive list of all the things that are going on in Australia, but it's just a few areas that are driving investment that I wanted to call out. Laurie will talk about SDA payments in her part of the presentation, but one of the ways of driving investment is around government subsidies and payments, which will then be used to either blend the cost of financing and make projects that are not necessarily financially viable to then add a subsidy to make them financially viable. And the SDA is an example of that. Other ways are to look at tax incentives, and the NRAS scheme, which is now in runoff, was one of those ways, and it provided a tax incentive to mum and dad investors to look at investing in affordable housing, and effectively paid a top up to their rent, where they were getting at affordable levels to market. So bringing their returns back to market levels. All of these examples on here are ways that government can play a role, but we know from the demand and the need for significant supply that government isn't the only solution. It's part of the puzzle, and it may be part of the puzzle to a degree, but there needs to be innovation in the sector to really drive different types of models and different models of scale as well. So we realise that government is just one part of the pie, but it's not necessarily one that that has to drive it on its own. We wanted to talk about two cohorts in this presentation. Laurie will touch on the cohort of individuals living with disability and what that means to individuals and accessing housing. Camille touched on this in her presentation, but it may or may not be of knowledge to lots of people but the fastest growing cohort of people at risk of homelessness and experiencing homelessness is older women in Australia. And often they're the silent group of individuals, because there may be sleeping in their cars, there may be couch surfing, but they don't actually, there's a group of women that don't actually have a permanent home that they can call their own. The reason behind this is, one is a lot of gender issues in terms of women and low super balances, what it means to individuals in private rental, how our super industry and our overall retirement industry is set up for a couple that are in home ownership by the time you retire. So if that isn't true for you, then already the system is against you when it comes to what it means for retirement and what this looks like for you. There's a range of women going through this at the moment, but there's a whole lot of single women that are coming up to facing this potentially in the next 20 to 25 years. And if we don't invest in suitable, age-appropriate, age-in-place housing at affordable rental levels, there's going to be a whole lot of stress on our social housing requirements, and the impact to government is going to be huge on that. So SFA have been doing some work in that area, and there's some really innovative things going on in overseas jurisdictions. In the UK, at the back end of last year, they launched, a group of fund managers launched a fund called the WISH Fund. It's Women in Safe Homes, and they've raised, I think it's £100 million to work with women's housing providers to own housing, and they will lease them to women's housing. But they've managed to raise significant amounts of impact investing capital to drive supply of that housing. So that's ways that we can learn and look for overseas models to really drive innovation. And this is what I just touched on before about housing is a gendered issue. It's not necessarily that everyone comes to homelessness or the need for social and affordable housing in the same ways. Older women in particular don't have the same complex needs as many other people from a homelessness perspective. I mean, that's a very sweeping statement, so apologies for that. But I think I just wanted to call out the fact that homelessness doesn't have a traditional face. There's no one person that encompasses what a person is that requires or needs a home. Everyone requires and needs an appropriate, safe and affordable home, and that's what we're trying to do, is drive supply for a range of cohorts, but across that continuum, to ensure that Australia has a well-functioning and well-supported, financially sustainable housing market. So I'm going to pass on to Laurie now, who's going to delve more into the disability housing aspect of things.
Sure, thanks for that, Beck. So Specialist Disability Accommodation, or SDA, is probably a phrase that's been thrown around the industry quite a bit in the last year or 2 years. So I'm sure everyone's probably heard of that phrase at some point. But really what SDA is, it's the subsidy that was introduced by the NDIA in order to try and increase supply of appropriate disability accommodation. And that was really driven off the back of the fact that there is such an undersupply, particularly when it comes to accommodation that is accessible and appropriate for people living with disability. When the NDIA introduced the subsidy, they spoke specifically about 6% of NDIS participants requiring this type of accommodation. And so that was around 28,000 individuals. That stat is quite a dated stat now, though, and we think that there's actually far more individuals that require this type of accommodation, and kind of the rollout of the SDA plan in people's plans has shown us that there is still potential for us to reach kind of more of that 6%. The other thing on that is that there's obviously 94% of individuals who are living with disability that don't qualify for this SDA. And so we're starting to see some models where there's a bit of a combination where you have part SDA and part non-SDA in a similar house. And that's really encouraging to know that we can actually reach kind of more than just that 6% that the NDIA initially indicated. Beck, do you mind passing on? Thanks. So the current budget for SDA is 700 million to be spent annually as part of the NDIA. At the moment, it's only up to 185 million. That's we're actually seeing in people's plans. So there's still a fair way to go in terms of establishing that $700 million spend. It is a bipartisan support. It has bipartisan support, which is great. So we know that it is going to be here. And that's obviously something which for investors is really important. You know, this is a 20-year subsidy. And as an investor, that really plays into the risk return kind of profile of these types of investments. So how's the SDA actually calculated for those of you that don't understand, that don't know? Sorry, Beck. So there's kind of two key variables in this, and the one is what they call the base price, and the other one is the location factor. So what the NDIA has done is that they've broken it down into 4 design categories. So they've said that individuals either need to live in improved livability accommodation, robust housing, fully accessible, high physical support. And so the base price is really built around what type of support that individual needs from a design perspective. And then also whether it's kind of a 2-bedroom or a 1-bedroom or a 3-bedroom, that's what determines the base price. The location factor, as you can imagine, if you look at the whole of Australia, $200,000 gets you something very different in New South Wales than it does in Western Australia. And so the location factor is really just a multiple to try and encourage that supply is built in all different areas of Australia. The base price for me is really interesting because when we really start digging into the design categories and you start realizing the different needs of individuals. So for example, a robust house requires specific ceiling heights because individuals with intellectual disabilities often have behavioral issues. And so things like for support workers to have escape doors in bathrooms so that they don't get trapped between the individual and the door. All those types of things kind of play into the design. And so it's a fairly complex system to navigate from a design perspective. And because the industry is still really in its infancy, a lot of those questions we're only kind of starting to answer as we're developing these houses. So it's very much a learn as you go at this stage. And I think one of my developers, Sam Grace, is on the line at the moment, and he'll definitely attest that. I know they've run into kind of a number of questions on the design side, but how the NDIA structured the payment is really to try and cater for that, to try and make sure that we're delivering design that really caters to the need of those specific individuals. So this is just a really brief snapshot on kind of where the SDA is at the moment. So the NDIA is really good at releasing quarterly reports and kind of showing where the industry is at. So at the moment, there's about 15,000 individuals with SDA supports, but that only really equates to 185 million, which then really has that question about, well, if you're trying to get to 700, surely that's more than 6% of NDIA participants. So but it is the encouraging thing about these stats is it is growing from quarter to quarter. We are seeing more and more participants getting SDA in their plans and more dwellings being enrolled, but there is still definitely a way to go for us to get to that kind of 700 million annualized target that the NDIA has. So SVA's journey for when it came to SDA was, at the beginning when SDA was introduced, we really felt like we needed to play a role. We have a consulting team at SBA that has a real depth of experience working with service providers in this space. And so there was obviously a concern from service providers that all of these investors were going to rush to the markets and try to take their clients and build houses that weren't appropriate and all that type of thing. And so we really felt like SVA needed to step in and make sure that we had essentially the tenant at the center of the conversation. Making sure that investors were with the right intention were at the table. And so that's why we decided to set up what we call the Synergis Fund. The retail residential market is slightly different to something that we've done before. So we partnered with Federation Asset Management. They're a social infrastructure asset manager, and they really bring that residential real estate expertise to the table. The target for the fund is for us to raise about 600 million in investment capital and then leverage that so that we have a fund of about $1 billion. So on the next slide, I'll show you the portfolio snapshot. So you'll see we still have a long way to go to get to that billion, but feel pretty confident that the capital is going to come into the markets that will allow us to get to that point. Again, a lot of investors are still nervous. It's still kind of very early days. And particularly this year, it's been quite challenging having some of those conversations with investors, but we are slowly being able to prove up that this really is an investable asset class and it's really worth, the risk return profile is really correct for what the investment is. So we're hoping that we'll see more and more institutional capital come to the market. At the moment, our fund is really those kind of impact investors, philanthropic type investors are really the ones that first came to the table to help us kind of scale up and to really show that this investment strategy works. So if you think about the different roles, the role of the Synergis Fund is to be the owner of the asset. And so what that means is there's a number of players in kind of the mix. And so our key relationship is with our SDA provider, who is also our developer. Their role is to develop the property and essentially become the manager of that specific property. In order to receive the SDA payments, you need to be an SDA provider. So they are the ones receiving the payments and then either passing that through to the Synergis Fund on a head lease model, or if they did not want to take vacancy risk, then we take the vacancy risk and essentially they take a fee and just pass through whatever remains of the SDA payment. The SDA provider's role is really important. And one of the biggest things for us is making sure that we partner with the right SDA providers, because their role is really about securing tenants, securing sole providers, making sure that everyone in the house is happy and that the house is appropriate for that individual. And so for us, it's really important that those SDA providers are, that they really do know what they're doing. They have that depth of relationship in the market. When we started the fund, there were kind of three things that really were the three pillars that we set up the fund on. The first one was that whole thing about being tenant-centric and having the tenant at the center of the model. And one of the ways in which we are thinking about doing that is our consulting team is doing a piece of work looking at a metrics framework. So how can we actually measure that these individuals that are living in these houses are having a better life because of it? And so our consulting team have a depth of kind of knowledge in the space and have done these types of frameworks before, are busy looking at that and seeing how can we actually measure the success of this model and making sure that these tenants are living life to the fullest, I guess. So that's the one thing which is really important to us, was that being tenant-centric. The second thing I've already mentioned was about those deep relationships with SDA providers. And so when we set up the fund, we say we probably wouldn't have about more than 10 relationships. At the moment, we have 5. And those 5 are giving us enough pipeline that we haven't got any more developers in the pipeline at the moment. But each of those developers brings something unique to the table. But at the bottom line is that they're doing it for the right reasons, and that's one of the most important things for us. Their vision is aligned around tenancy and making sure that the housing is appropriate for those particular tenants. The third thing that our portfolio is really built on is diversity. So if we had to spend 5 minutes talking about our housing preferences just to these people on the call, they would all be really different, right? Some people want to live alone, some people want to live with others, some people want to live by the beach, in the city. And so we really felt it was important to deliver a product to market that reflected that diversity. It's really easy, if you look at the matrix, to kind of target certain areas where the economics are the best. But what we really felt was more important than that was making sure that we were diverse, not only in geographic location, but also in the types of designs that we're doing, the types of builds, making sure that we're delivering not just apartments or villas, but also houses. And so really just ensuring that kind of diversity of supply that's going into the markets. Beck, do you mind going to the next slide? Thanks. So where are we currently at? So we've had quite a year of learning in 2020, and our current portfolio is about the 60 million mark, and kind of that grows on a weekly basis. So it's forever changing. As I mentioned, that's at the moment is spread across 5 SDA providers and is a mix of houses, villas and apartments, predominantly houses at this stage. So a lot of kind of 2 bedrooms with maybe a 1 bedroom attached to the back, or a 3 bedroom with 1 bedroom, or 2+2. So those are kind of the common designs that we're seeing that work both economically and for the tenants themselves. Our geographic spread, we're in 4 states so far. We've been talking to a few providers in WA, but nothing kind of concrete yet in terms of pipeline coming out of WA. And then our SDA category, it's mainly split between robust and HPS with a little bit of independent living. There is also some tenants going in at fully accessible, but that SDA category is really around how we've built it. So you can build to HPS and still have a fully accessible tenant in that place. But yeah, so we're quite happy with where the portfolio is at the moment in terms of diversity, given that was one of our key goals. And so as we keep building, that's something that we are going to be looking at really closely to make sure that we are still delivering a supply into the market that is diverse and caters for those tenants' needs. So Beck, I might just hand over to you for the last slide.
Thanks, Laurie. We just want to round up by how do we fix the issue of lack of housing supply, and how do we change things? And I wish there was a magic wand. I wish there was something that we could do. And as many of you on this call know, you've been working in this market for a long time, and things are changing, but at a snail's pace. So how do we continue the momentum to drive different housing supply levels, and to make an Australia where everyone has access to affordable, appropriate and stable housing supply? So there's a range of things that we need to do as individuals, as organisations, and in the roles that we work in is around convening stakeholders. And I put the example of the Constellation project up there. That's a PwC run project that has convened a range of individuals, both from the not-for-profit, for-profit sector, and a range of government, as well as financiers, service providers, and people who are operating in the market, but with a way to bring all the brains together and work together to drive housing solutions. And there's some great work being done around housing subsidies, also inclusion rezoning, but also working with various state governments to see what can be done to drive housing supply. And there's a target for new housing supply that the Constellation Project is really driving towards. More support for innovative housing models. I touched on that earlier about organisations such as Nightingale Housing, but also there's some other great examples such as Assemble Housing, and there's an organisation called Barnett Foundation that are working to bring people in social housing straight into home ownership, and working with financiers to provide patient capital to effectively help them to get on the housing ladder by adding a different layer of financing into their home deposits. So there's some great organisations out there, but looking at things on an innovative level, but at small scale. So how do we really drive the scale of those organisations, but then bring in investment? We've got a great superannuation industry, but how do we really unlock that capital? And SDA is a great example of how we're seeing financing at scale come to the market, but we're also seeing organisations and super funds directly investing themselves. So First State Super, CBUS, there's some great examples of super funds kind of walking the walk in terms of really adding value into what retirement looks like for individuals, both from a returns perspective, but also into how they're building communities in Australia. The point around government assistance, regardless of those innovative models, their government assistance in some form may or may not be required for some projects. And so the continuation of having great conversations with government, be that on a state or a federal level, and the NIFIC is a great example of seeing federal government come to the table, but how do we really re-engage and get them to drive forward in those changes? And I think there's some real potential and some great opportunities coming for NIFIC this year. And then overall is how do we create this long-term, stable, investable product with an investor hat on? People always want to know what they're investing in, and being able to understand what the long-term investment horizons look like. What do SDA payments look like in 10 years' time? Is 10 years the same as 5 years? And what does that mean in terms of pipeline? And what are the long-term growth opportunities? A lot of those things are the key to unlocking, especially the large super fund money, and how do we provide it those opportunities? So scale is required, but how do we provide a financially sustainable system? And I wish I had the answers for all of those things. Unfortunately, I don't, but hopefully having these conversations and webinars like this provides kind of people with something to think about, and also connects people so that we can have these convening of stakeholder opportunities and share ideas, share opportunities, and really drive the market for outcomes for the individual, both from a positive and a measurable perspective. And so that's the end of the presentation. So thank you everyone for your time.
Thank you so much, Rebecca and Laurie. That was fantastic and a really beautiful way to wrap things up with more questions than answers. And if anyone in the call would love to bounce ideas and reflect on one of those points, please jump in. This is the moment for questions. We have 15 minutes with Rebecca and Laurie. We're really fortunate to have them both on the call, so please don't be shy and jump on, ask your questions. I do have a few, so I'm going to go first, but please go ahead and type yours in the chat. I would love to circle back to the impact piece. Obviously, investors want returns, but impact investors also want to be sure that the impact is going to be measurable. How do you approach this with the Synergis Fund?
As I mentioned, our consulting team's doing that framework because for us, we really need to understand what good looks like from the tenant perspective. We understand what good design looks like. We understand kind of the supply demand of the market, but how do we actually know that individual living in their house, in that particular house, is better off living in that house? And so our consulting team is busy doing that piece of work. They're really kind of looking at it from that level and understanding what are the key things driving happiness of these individuals, what are the key things that for them are important when it comes to a home. And so out of that piece of work, the idea is that they'll come up with some key metrics which we can then measure and benchmark what good looks like on.
Thank you. Awesome. I've got another question on growth and potentially returns. So you mentioned that affordability housing had the particularity to offer great risk-adjusted returns. And when we look at those numbers in terms of like the need and the long term of those subsidies, we can really see the opportunity for growth. So can you go a bit deeper into those trends? So growth, and can you tell us more about the sort of returns that you are targeting?
I can talk about it more broadly, and then I can let Laurie talk about it from an SDA perspective. So I think when we think about risk-adjusted returns, if you think about social and affordable housing, especially social housing, much of the underlying payments and revenues are coming from government sources. So effectively, you're getting government-backed payments. And so if you can look through those, you're taking government risk on a residential asset. So what does that look like from a risk-adjusted return perspective? So that doesn't necessarily have to return you the same levels as a private residential return, which may be in the double digits, but is a single-digit return appropriate for a government risk? What does that look like compared to a treasury bond, for example? And how does that then become a appropriate risk-adjusted return? So affordable housing is a similar kind of look into, in the sense that you may not get the government payments, but you also have long-term tenants that are willing to stay for strong, affordable, like high quality housing. And if you can provide that certainty of rental streams, then that becomes a strong investment product, because you have the rental streams coming through, and that means that becomes that certainty of an investable product, which is the point that I think I raised at the end of the presentation. So it's not just about kind of capital growth, which often investors have relied on from the perspective of residential investment, but what does it mean in terms of the long-term underlying payment streams, and what does that mean for continuing yield for your investment? So looking into all of those things, and what does that mean for an appropriate return for the risk that you're actually taking? So that's probably the overview from a wider social and affordable perspective. But SDA is slightly different because your payment streams are set according to government requirements. So Laurie might want to touch on that.
So I think at the moment, most of the projects that we're looking at, it probably comes out somewhere between, if you're looking at it not under a head lease model, it probably comes out somewhere between 10 to 14% that drops out the bottom after management fees have been taken off. But that doesn't include vacancy risk, and that's obviously one of the biggest risk factors of this market. We think that kind of return threshold is fair for the risk that you're taking. And our experience to date around vacancy risk has been that it's traditionally been a lot lower than what we have been modeling and what others have been modeling. And so that's where the market is at the moment, to compensate for the risk of A, vacancy being unknown, and B, it being a fairly new market. What we expect will happen is, because it is a government revenue stream, as the market proves up, you'll see those returns adjusted appropriately for the risk that then is reflected. So that's what we're seeing kind of in the SDA space at the moment.
That makes sense. And yeah, good point on the vacancy risk. Didn't think about that, but that makes sense. We do have questions in the audience. May I invite Lynette can you unmute yourself?
I can.
To ask your question. Hello?
Yes, can you hear me now?
Yes.
So thanks. I've only just discovered community land trusts, what they really mean, in the last few days, and listened to a whole chapter out of a book called On Common Ground, explaining exactly how Burlington in Vermont, the local government got behind starting a land trust so as to be able to provide affordable housing for low and middle income people. And it is based very strongly on the housing remaining affordable, even if the people sell or move away. And it's also, there are buying and there's also renting of houses. And I just wondered if either of you on the panel have heard of community land trusts or would like to be looking at investing into the land trust that I am expecting there to be soon happening in Brisbane.
Yeah, I think, Lynette, we're really keen to be part of that. I think I know that that model as well is very popular in Switzerland, and there's some great examples of European kind of communities based on that. And your point around keeping the supply affordable is something that we're not concerned about, but making sure some of the projects that we work in take that into account, because it's fine to invest in an affordable housing supply, but if that then turns into a 20% increase, the next person can't then keep that affordable. So how do we look to have those covenants in place in some projects and ensure that housing supply remains affordable? So I know that there are some kind of local government conversations here in Sydney around community land trusts, but we at SVA haven't invested in any directly, but definitely think it's a housing model for Australia to explore more broadly.
Yes, thank you. Thank you.
Thank you, Lynette, and thank you, Rebecca, for the answer. We have time for one more question, so I will invite Maggie to ask hers. Maggie, if you're still with us.
Hi, yes, I'm still here. Yes, I'm interested in the shared equity models that SVA might already be engaged in or have some interest in, or know how they're working. I suppose I'm particularly interested in whether models have been evolved that are applicable, that are based on formulas of various parties investing, including the tenant or the resident having a share in the equity as well.
Yes.
Yeah, so I know there's a range of people that we're speaking to that are looking at shared equity products. There's, as I mentioned, Barnett Foundation is someone that we're working with who the view is that we can try and access institutional investment to provide that patient capital, which becomes that shared equity type product. There's an organisation called Hope Housing that are looking at shared equity for key workers in Sydney, and so that becomes the issue that key workers like policemen and teachers can't live in and nurses can't live in the neighbourhoods that they're working in, and often commuting long hours to get back and forth.
Yeah. Did you, sorry, Rebecca, did you say that was Hope Housing?
Yeah, HOP housing, yeah. Maggie, if you need me to get you in touch with someone there, I'm happy to do an intro. And
great, that would be great.
And even I mentioned Assemble, so their model is around rent to buy type investment schemes. So so there's lots of organisations out there that are doing things, because I think, Maggie, it's another it's another lever to pull effectively in kind of giving people a pathway to private home ownership, and I think it's just bringing the right mix of investors and their frame of kind of long-term investment to the table, because I think that's the part where it becomes tricky as to how do you realise that kind of shared equity investment. So yeah, there's definitely conversations happening, and would be keen to kind of explore that as well. But yeah. Right.
Okay, great, because we are hoping to talk with government about that as well. I think there's some product in Western Australia that has some elements of that.
Exactly. So WA they have a scheme, and I think Victoria did have a scheme, or they have one, but I'm not sure.
Yeah. Great. Thank you.
Thank you so much, everyone. I'm afraid that's all we have time for. Thank you, Diane, for your comment in the chat as well. But yeah, we are going to wrap things up. And I love when our chats finish on a little bit of collaboration. That makes me really happy. So, dear members, I hope this webinar gave you practical knowledge and insights into impact investing and how powerful it can be to create inclusion and social impact. I think you will agree with me in saying that Rebecca and Laurie has shared really valuable insights and a lot of great data on this topic. So thank you so much, both of you, for this wonderful presentation. We appreciate your time and we appreciate you taking time out of your busy day to share your learnings. Our next event is on Wednesday, January the 27th, just after Australia Day, and will be on investing in food tech and ag tech. And for the first time for this group, we are welcoming speakers from overseas, from the US actually. We will have Michael Dean and John Friedman from Ag Funder. So it should be an interesting conversation. I hope you can all join us. One more thing, our group keeps on growing. We are now 580 members, which is so fantastic. But I would love you to help us grow even further. So if you enjoyed today, please invite your friends and colleagues who might also find this conversation useful. And make sure you follow us on social media. I've pasted all the links in the chat. I have one last favor to ask you all. I would love to get your feedback. I've been running these events for a year and I need to understand if these are useful and how I can make them even better. I have shared a link to a survey in the chat, so please jump on it. It will take 5 minutes and it will really help me shape the strategy and the structure of this community moving forward. Thank you so much for your support. And again, thank you so much for coming today and making the time and commitment to learn and be curious. By learning and choosing to support impact investing and sustainable finance, I truly believe that together we can create a positive impact at scale. So have a wonderful day, everyone, and see you soon.